I'm Caroline Hyde in London, in for Emily Chang, and this is Bloomberg Technology. Coming up in the next hour, record production and deliveries, Tesla tops estimates in the first quarter, and the Bitcoin bet, it pays off. We'll break down the numbers and have analysts' investor reaction. Plus, Apple doubles down on the US, pledging a $430 billion investment to create tens of thousands of jobs and open its first East Coast campus. Pretty political statement as it touts its tax payments. We'll have the details. And Lyft backs up. The company puts its autonomous driving research unit into reverse, selling it to Toyota in a $550 million deal. These stories in a moment. But first, of course, US stocks rising once again to all-time highs amid solid corporate performance and, of course, anticipation of the Fed later in the week. More on that and Tesla's numbers with Bloomberg's Katie Greifeld and Kriti Gupta. Katie, kick it off for us, will you?
Well, Caroline, there was plenty of green on the screen today. The S&P 500 held on to gains up about 0.2%. The NASDAQ 100 stronger still, up about 0.6%. It helps there that Treasury yields were basically flat today, up less than 1 basis point. Your big winner, though, was the chips, with that Philly Semiconductor Index ending 1.7% higher. But overall, it was a pretty quiet day in markets, and this next chart helps explain why. It's the biggest week of earnings season. Over $18 trillion in S&P 500 market caps reports this week, with tech right at the top of the pack there. And it's been a pretty good quarter for tech so far. The companies that have reported have surprised by about 18% on average, but we are just getting started here. Tesla kicked us off after the bell, and we still have yet to hear from Apple, Alphabet, Amazon, Microsoft, all the big tech heavyweights. And Kriti, if you look at the options implied move, how traders are positioned heading into this week, all 4 of those companies are expected to move by at least 3% in either direction after earnings. So it could be a long week, Kriti.
Well, Katie, thank you. When you talk about those big moves, there's another big move you have to keep an eye on. It's always in that crypto space. Take a look at this kind of chart behind me. Bitcoin actually down at the moment, receding back from that 53 point. But look, in intraday trading, it did actually gain. It was up almost 5%. And you actually saw those stocks gain with it, those crypto stocks, I should say. So Riot Blockchain, Marathon, you also saw those rally, even PayPal, which has been associated with Bitcoin. So I want to go from Bitcoin, though, from those big tech names, because Katie, you were just mentioning that we are expecting those earnings. Let's see how they did today. Kicking it off with Amazon, actually higher on a reported stock split. That's something we saw in Apple too, although that's not the reason Apple traded higher today. This is coming after a $430 billion investment from Apple that's going to be pretty focused here in the States. And that, of course, putting both of those shares higher. You also saw Spotify gain on a plan that they could actually raise prices. So once again, more revenue for that music company. And then lastly, I want to bring your attention to that global autonomous electric vehicle ETF, the Drive ETF, because when you see those big tech names rally, they tend to take those electric vehicle makers with it. And that brings me to Tesla. Tesla's, of course, the hot story right now, up 1.2% in regular trading, down after hours, even though, Caroline, they actually did beat those estimates. So why are they dropping? Well, traders on the floor are really saying that this has to do with options pricing. This also has to do with the fact that perhaps that beat wasn't as big as some of them were expecting.
Kriti, I love it. I also love the brandishing of the vaccine band-aid as well. Wear it with pride. Thank you very much indeed. Katie Greifeld and Kriti Gupta setting us up nicely to just dive a little bit deeper into Tesla's first quarter earnings. Bringing in, of course, now Tasha Keeney. You know her, of ARK Invest, Tesla, top holding in the firm's ARK fund. And you caught everyone's attention, Tasha, of course, a little bit earlier in the year with your view on where Tesla's price target will go to 3,000 is your general case by 2025. What did you hear today that excited you?
Well, I'm most excited about Tesla's opportunity in autonomous driving. And what we saw in this most recent release is that, they do plan on releasing the FSD full self-driving beta version of their city streets autonomy software to more customers soon. Tesla also mentioned that they're realizing that with their new vision system, that radar is becoming unnecessary sooner than expected. So I think this has been a long time coming. Tesla has the largest deployment of robots in the world. If you think of each car as a robot collecting information, and I think now as we're seeing autonomous vehicles commercialized for the first time, Waymo was first commercialized in the U.S. I think Tesla is a real player to watch here with their scale and data advantage.
Is it bullish or not when you hear then of like a Lyft getting out of that and selling on to Toyota?
I wasn't too surprised to hear that. We've seen a lot of shuffling in this space. Most recently, GM also acquired a company called Voyage, and they had acted as if they were close to commercializing, and an acquisition would seem to say that maybe they're not so close if they have to integrate new technology and a whole new team into their team. I think this is a really tough problem to solve. And I don't think every company is going to be successful. In fact, we think the auto industry is going to consolidate significantly over the next decade as we see the shift to both autonomy and electric vehicles. So I think you'll continue to see more shakeups, and really whoever launches and gets to scale soon will have an advantage in this space.
Of course, there are plenty of other reasons as to the thesis of the valuation and the view that you think it's going to get to an annual revenue of $700 billion. There's its capital efficiency, its insurance business. Where, therefore, do you think its capital efficiency is going at the moment? What did you make of, how its cash placement is, what it's doing with Bitcoin, how it's driving, down the costs of making each car?
Yes, we've done a lot of work on this space. So my partner analyst, Sam Forrest, has modeled the cost decline of electric vehicle batteries using Wright's law. And so Wright's law says that for every cumulative doubling in production, you get a corresponding reduction in demand. If you use Wright's law to model Tesla's cost decline, you'll see that, as we saw them announce at Battery Day with the $25,000 car they expect to produce over the next few years, that electric vehicles are really reaching price parity with gas-powered cars. And that's going to cause a very important inflection in demand. So the total cost of ownership of an EV is already lower than a gas-powered car, but now the sticker price is going to be lower, and that's really what consumers look to. So we think electric vehicles are the future, and we're really just in the early innings of this. Tesla in their release pointed out that 97% of cars out there today, gas-powered cars, and actually 98% of their trade-ins are gas-powered cars as well. On the capital efficiency side, one thing that we changed in our most recent price target is we actually think that they could be more capital efficient than we were previously given them credit for. And that's as we've seen them build out production in Shanghai and sort of across the globe. We've seen that they actually can lower that cost per car a little bit more than we had initially anticipated. But again, that larger story is really that long-term cost decline curve with electric vehicles that we've done some work on.
Yeah, certainly they've been talking plenty about the cost. The average cost per vehicle across its model line was $84,000 back in 2017, and now it's only $38,000. So we see that movement. I'm interested in the overall competitive landscape, though, because you say this is like sort of a seismic shift we're seeing in the whole view on electric vehicles. Is there a worry, though, that with GM, with Volkswagen, they too can drive down the cost of electric vehicles, and we're basically at peak market share for the likes of Tesla?
Yes, actually, and that's an important part of our thesis, that we think that other players will enter the market with competitive electric vehicles. In our model, we don't expect Tesla to take more than 20-some% share of each segment that they enter in the vehicle space. We expect other automakers to come in there. But what we have seen is that Tesla is still much further ahead on performance and price. If you model those two, Sam Corris, my partner analyst, has done some work looking at the charge rate versus cost. And if you look at Tesla's lineup, other automakers, may be able to match performance, but they're doing that by producing a very expensive car. Tesla's the only one who's able to produce a very high performance and relative to competitors, an expensive vehicle. So we think they're still at least 3 years ahead of the competition. But that said, we do see a lot of uptake, especially of the smaller electric vehicles in China, for instance. Electric vehicles are going to happen, across the globe. And it's not just going to be passenger cars, by the way. We think it's going to be machinery. We think we've done some work on electric semi-trucks that could actually be cost competitive to rail. Electric vehicles are really the future everywhere. And we expect many companies to participate. But again, not everyone will be successful. There will likely be some consolidation in the space.
You're, of course, a long-term holder, Tasha, to a large extent, in terms of your thesis is a longer-term perspective. But when you're seeing the share price, not moving that volatile right now, off by 1.8% in after-hours trading, in the market, the options pricing, we're seeing swings of anywhere up to 7%. But do you think the market just had anticipated all the good news and we needed more in terms of a blowout for a real performance today?
That's a possibility. I would say that when you look at Tesla as a stock, you really should look to the long term. So, we take these earnings periods as time to learn more about the company, of course, listen to the calls, get more details on things like the autopilot updates that are very exciting that they're enabling. But overall, I think, Tesla is an innovation story. So at ARK, we invest in disruptive innovation, and we have a 5-year time horizon on all of our investments. So I think when you look at disruptive innovation, things can change really quickly. You see that with exponential growth. So you really want to look at it over a longer term horizon. So I think there could be some immediate reaction to this news tonight. But I would say that we are certainly keeping in term we are certainly looking for the longer term picture here, that 5-year picture for both autonomy and electric vehicles.
And with a bull case of $4,000 per share and potentially $4 trillion market cap, quite phenomenal set of research. Tasha Keeney, it's great to get some time with you on a day when we have Tesla's earnings. Thank you so much from ARK Investment, of course. Now, as we covered briefly with Tasha, Lyft says it will sell its autonomous driving unit to Toyota subsidiary Woven Planet. Now, the $550 million deal means that Lyft is to turn an adjusted profit, actually, in the third quarter of this year. Lyft follows Uber in stepping back from the pretty costly driverless vehicle research, once thought to be on the verge of revolutionizing ride-hailing. Now, coming up, we talk, well, it's also related to Tesla in some way. Bitcoin rallying once again back to nearly 54,000 after hitting the lowest level since March. How sustainable, of course, is the price at these sorts of levels? How much higher, how much lower? Well, we'll have to debate. This is Bloomberg. So Bitcoin rallying back a little bit as investors took advantage, perhaps, of the lowest levels in 7 weeks to pile back in. Now, the digital currency climbing past 54,000, as you'll see, currently trading about 3% higher over the last couple of days. We got some interesting news. JP Morgan preparing to offer a Bitcoin fund to its wealthy clients, the latest sign that Wall Street company at least is warming to the largest cryptocurrency after it soared in recent months. For more, let's get the inside track with Sunny Singh. He's Chief Commercial Officer at BitPay. And your take, it's a volatile asset, we know that, Sunny, but do you think it was JP Morgan news, some more institutional buying, people making the most of a lower price point?
Yeah, so great to be on. So I think for the last month, we've had a lot of excitement building up to the Coinbase IPO. And so when that happened, it was like, what's next now? And the market started trending a little bit lower, obviously, and you kind of had a Coinbase hangover. And in the old days, 3-4 years ago, that price drop from 10%, 15% could have very easily become a 35-40% drop. And I think that shows how the market in Bitcoin is different right now, where, it started dropping and then the institutions came back and bought in around 45, and that kind of set the price floor at that point, because a lot of the institutions got in around 40, 50,000 in the last couple of months. So they saw anything below $50,000 as a good price and buying opportunity. So they started buying back up again. And what you're seeing now is a shift between institutions are playing the Bitcoin game and the regular retailers, the small investors are kind of moving out of it and more in the altcoin because there's better returns in that industry now.
Yes, Sunny, full disclosure, my husband's a senior manager over at Coinbase, but it is interesting that I heard some takes that maybe the fact that we had this listing meant that there are more assets to play now if you want to put money to work and you want to gain some sort of exposure to crypto, well, Bitcoin isn't your only game in town anymore. Do you believe that in some way, that maybe some flows were actually taken away by the fact that you got this big listing, you've got appetite in other altcoins as well?
A little bit. I mean, 3 years ago during the ICO boom, there was obviously a lot of other coins also. But the difference is that people believe, and I was at an event over the weekend with a lot of friends, and everyone was talking about, hey, I'm buying this coin, I'm buying Stellar, I'm buying Cardano, I'm buying Solana, I'm buying, whatever coin they wanted. And no one was buying Bitcoin anymore because Bitcoin, they feel, only has a 2x or 3x run up anymore for the next couple of years. With these other coins, they can make 5 to 10x in 1 year, or in 6 months, actually. So a lot of people believe that the smart money or the easy money is already been made from Bitcoin. And now this is more for institutions where you're just going to get like a 10, 20, 50% return every 6 months, which is amazing. But it's not for these young retail kids that, like Robinhood traders want to see pretty exciting stuff and get 4x returns in 6 months.
Is there another catalyst? What's the next catalyst we look to after a listing, that could be to the downside or to the upside, do you think?
So I think real world use case. I think everyone's convinced now trading is here to stay. JP Morgan's launching new funds around buying and selling crypto and all that. But what really can we do with this crypto? And you're seeing the NFT boom really take into consideration now things that are happening. BitPay, we're on the payment side. We just made an announcement today that Camping World now accepts crypto. Last week, WeWork now accepts crypto. My phone is ringing off the hook every day of companies now wanting to accept crypto, of the Fortune 2000 companies. So you're starting to see that more on the payment side, and Square and PayPal will jump in that space. And then also there's another catalyst coming in June, a Bitcoin conference, actually, a physical conference in Miami. And you're going to have all the top people like Jack Dorsey there and all that. And I think you're going to see a lot of innovation coming around that conference and a lot of new announcements that really drive the market higher too, I think.
I'm interested in that point of actually spending your hard invested in Bitcoin, because I feel like people want to hold this asset right now, or indeed speculate on it. It's a trading asset. But are people really buying their Teslas with it? Are they really, the companies that you're speaking to, when you put in place the option to purchase things with Bitcoin, is anyone actually doing that quite yet?
Yeah, so BitPay processes over $1 billion a year. So people are spending crypto. The difference is about 4 years ago, 95% of that was coming from Bitcoin. Last week, we had our lowest Bitcoin volume ever with only 50%. So we're seeing a lot more volume coming from Dogecoin now, believe it or not. Dogecoin went live with us from the Dallas Mavericks, and Mark Cuban really is a big fan of that. And we saw over 10% of our transactions coming from Dogecoin last week. But also stablecoins is a very exciting part for payments. And that's a stablecoin where it's backed by the US dollar. And Visa and MasterCard are really promoting that in a big way. So people will use Bitcoin maybe as an investment vehicle, but then stablecoins or other currencies around payments to actually spend online versus using a credit card, which is much more riskier.
Spending the Doge. Who'd have thought it? BitPay Chief Commercial Officer Sunny Singh. Stay well. Great to have your take. We thank you. Meanwhile, of course, China is expanding its antitrust crackdown beyond Jack Ma's technology empire. Now, the government is now investigating suspected monopolistic practices at Meituan. Here's the food delivery giant, of course, and Beijing has become increasingly concerned over the growing influence of tech companies such as Alibaba, Meituan, and plenty others over every aspect of Chinese life. Now, coming up, Apple plans to invest $430 billion over 5 years, creating 20,000 jobs and building a new campus in the Tar Heel State. Details next. And speaking of Apple, it reports earnings this Wednesday. Its blockbuster fiscal first quarter report may be a hard act to follow, of course. Keep it here on Bloomberg as the most valuable tech companies report all this week. We have got you covered. This is Bloomberg. Now, Apple doubling down on its U.S. investments, announcing a $430 billion plan to generate, according to them, 20,000 jobs and a new sprawling East Coast campus. Bloomberg's Mark Gurman joins us now to dig into what was, I took away as quite a political statement, first and foremost, who they were talking to, the consumer or indeed the politician with this, Mark. But first of all, put the size and scale into perspective for us.
Yeah, this is Apple saying that they are going to be making a $500 billion investment across the U.S. over the next 5 years. Now, according to them, this is a 20% increase over the initial $350 billion investment that they already pledged that they would be making beginning in 2019, which obviously was just a couple of years ago. The big question for me is how much of this is money that they would already be investing that they're simply touting to whatever benefit there is there. My sense is that most of it, these are in many cases existing suppliers that they're already using to source individual components for the iPhone and other devices. At the same time, we're seeing some very significant expansions in several different offices across the country. Here in Los Angeles, they're going to be expanding their Culver City campus. San Diego is going to see a large expansion. Boston's going to see an expansion. They have an office with only a few hundred employees right now in Boulder, Colorado, which will also see an expansion. They've already said they're doing work in Detroit. They're doing an expansion in Atlanta as well, and Iowa. Basically, any different region you look at across the country, seeing an expansion here. And that's being capped off with a new campus that's going to be located in North Carolina with as many as 3,000 employees working on AI and software. So you're seeing Apple really, move the heart of the company sort of out of Silicon Valley, out of Northern California, and spreading it around the country.
And sort of putting across the narrative that was in some way a focus on equity, really bringing Apple's money, dollars to bear, the cash they have to every single state in the United States. But it was also notable that they were sort of touting the amount of tax that they pay as well. Interesting, the narrative that we're getting among US politicians at the moment that, well, the administration looking at raising US taxes, but also, taxing your profit abroad a bit more as well.
Yeah, in the history of Apple, they're, 30, 40 years old at this point. They've never said anything or done anything by accident, right? It's no coincidence that later this week, we're going to see earnings results from the first full quarter of the 5G iPhone 12 line. And make no mistake, it's going to be probably a record-crushing number in many respects, based on them already saying they're going to be making multi-$100 million donations. They pay all this taxes. This is also a way to let the Biden administration know, just like they did with the Trump administration, hey, we're paying a ton of tax already, and this is coming as there's new antitrust scrutiny. Obviously, you're aware of the trial, the hearing they had last week with Capitol Hill, and then obviously all the other factors related to corporate tax hikes that have been discussed by the Biden administration. So there's a lot at play here, and it makes sense that they're announcing it just days before earnings, and really at the height of this tax discussion.
Got less than a minute left, Mark, but some big ad tracking changes as well.
Yeah, so earlier today, on Monday, Apple released iOS 14.5. And basically the news today is that, it's out, right? We've known this was coming already for 6-7 months. They announced it back in June. They delayed it a few months to get everyone's ducks in a row. But the big news here is really that it's Apple. And when you have Apple releasing a new software update, that means you're likely to see 500 million people take advantage of it over the next 3 months or so. So we'll see the results not too far from today.
Mark Gurman from Bloomberg, we thank you. Plenty more on Tesla's numbers up next. This is Bloomberg. This is Bloomberg Technology. I'm Caroline Hyde in London, in for Emily Chang. Now let's get back to the story of the hour. Tesla out with its first quarter earnings profit. The top estimates, revenue in line with projections. However, shares just fell a little bit in late trading, leaving traders apparently wanting more. Ed Ludlow, of course, you can run us through it.
Yeah, the story here really is that Tesla is getting better and more efficient at building electric vehicles. The rate at which it cut costs outpace the rate at which prices drop. We know about those price cuts here in the US and China in the quarter. That really helped to boost margins at a time where average selling prices were falling. We also got updates on all the things going on around the world. We know that Gigafactory Berlin and Gigafactory Austin will come online by year end and start delivering vehicles in small volumes. Tesla was able to mitigate the impacts of the global semiconductor shortage by switching suppliers in the quarter and recoding its software, rewriting its software to match the chips from those new suppliers, which was an interesting tidbit. As you point out, shares are lower in after hours. But coming into this, because the delivery numbers of 185,000 in the first 3 months of the year were so strong, expectations were high. But maybe you can ask your next guest about this. The beat was pretty significant. So what was it that investors wanted to see more of? Maybe we'll hear more about that during the call. We also know the big final takeaway. Tesla spent more on digital currencies, cryptocurrencies in the quarter, $1.5 billion, than they did on CapEx. Something to think on as we move into the second quarter. Caroline.
They also made a tidy profit, was 100 million or something on it. Meanwhile, we haven't even discussed Saturday Night Live, May 8th, with Elon Musk. Ed Ludlow, we thank you running us all through the Tesla numbers. Now let's stick with, well, the fundamentals, what there are of them with Tesla, and bring in Garrett Nelson of CFRA. And you've been ploughing through the details. We're awaiting the analyst call, but what do you make of perhaps the less than effusive reaction in after-hours trade? Because usually this is a volatile stock, and options were pricing at about a 7% swing.
Sure. Thanks for having me. I think it is a little surprising that the stock is down slightly here after hours, given the magnitude of the bottom line beat. It came in about 15 cents ahead of consensus. So, this is not a small beat by any means. But I think, it's a reflection of the fact that Tesla does have a strong track record of execution over the last couple of years. This is the sixth time in the last 7 quarters that they've beat. And so I think investors, the street expects them to be. And so, there's not that much of a pronounced, pop in the shares when they do execute better than expected earnings. So if there's one thing I could pinpoint as a reason why the stock is down, really the guidance was totally unchanged from what they said in February. So it's really, I think, the fact that they didn't provide more specific sales guidance. It was the same as that their deliveries would probably be up more than 50% this year over the 500,000 they delivered last year. And, I think given the strength of the first quarter deliveries, there's a little bit of disappointment there, but we think that's a calculated move on behalf of management, which really takes the pressure off them to meet, the short-term operational deliveries target.
So sort of try to under-promise and over-deliver rather than the other way around. Did you get enough detail in terms of new factories coming online, new production coming from Berlin, from Austin, as we're just hearing from Ed?
So that guidance is unchanged. Berlin and Austin are both still expected to be online, making first deliveries by the end of this year, as well as a new vehicle model, the semi-truck. Also, first deliveries expected by the end of the year, and with the Cybertruck, first deliveries early next year. So really no change at all on the operational guidance.
And Garrett, I know for you, sort of the key issue for Tesla, really, and the reason you have a hold on the shares is competition, right? And what do you need to hear from Elon and indeed the entire team on the call to sort of assuage your issues that perhaps we're at peak market share here?
That's right. The reason we have a hold on the stock is our concerns over competition. People have been talking about competition for a long time, the threat of competition surrounding this company, but the competition is imminent. That's the difference. You'll be seeing these models from Lucid and Rivian, as well as several models from traditional automakers such as Volkswagen, Daimler, General Motors. All of these things are coming, by the end of this year. So, and I think the difference is the specs of these vehicles are comparable to a Tesla vehicle when you look at both the price and the single charge range, which is extremely important to electric vehicle buyers. So I think that's what's really changed here. That and the fact that stock was up over 700% last year,
yes.
had such a big move. I think it's really taking a breather here early in 2021.
All about context, lest we forget that 8-fold ramp up that we saw in 2020. But I'm interested, we had Tasha Kearney of ARK Invest on to start the show, and her big thesis, and of course their sort of like standout call on the stock being worth some $3,000 per share come 2025 is the whole robo-taxi argument, the whole autonomous driving, the whole fleet of anyone when you're a Tesla owner being able to just lend out your automobile. Where do you think we are in that sort of narrative. Do you care about it much when it comes to what Tesla's overall analysis is right now?
There's no question that's a huge opportunity. If they're the first to crack the code when it comes to a level 5 fully autonomous vehicle, that would unlock a tremendous amount of pricing power in the marketplace. If they have a product that no other automaker has, it becomes sort of a must-have product that we compare to kind of like when the iPhone was first released. No one wanted a Nokia or Motorola anymore. Everyone had to have an iPhone. So it's very similar to make that analogy. So, but we while they get better, the autopilot gets better with each software release. We still think they're a ways away from getting to the full autonomy. So we think that's probably sometimes closer towards the end of this decade before that happens.
Garrett Nelson, we'll let you get away to listen in on the call and learn plenty more. CFRA Senior Equity Analyst, always great to speak with you. We thank you for the time. Now, coming up, as vaccinations ramp up, companies are preparing to, reopen. But work is likely to look pretty different compared to the pre-pandemic era. We'll speak with the CEO at Salesforce Service Cloud about how the state of services will be changed permanently. Our work-shifting conversation is next. This is Bloomberg. So the states of New York, New Jersey started to ease restrictions on crowds as COVID-19 infections and hospitalizations continue to slow. Meantime, US President Biden plans to announce Tuesday new guidance on wearing masks outdoors for vaccinated people, according to CNN. Now, this is the number of tech companies in the United States getting ready for a slow but sure return to the office. Salesforce said it will reopen its tower in San Francisco in May, starting with volunteer groups of 100 or fewer vaccinated employees per floor. Joining us now to discuss the future of work is Clara Shai. She's CEO at Salesforce Service Cloud. She's the latest guest on our work shifting segment. And you've got some really interesting stats to share with us, Clara. And first and foremost, talk to us about the optimism you're seeing in the data of your clients right now, seeing the reopening become a reality.
Thank you, Caroline. It's great to be back on the show. There is a good reason for cautious optimism right now. I mean, of course, it depends on country and region, but here in the US, 40% of Americans have gotten at least one COVID shot. And now business leaders are starting to think about how to seize the moment for this great reopening of society. So it's a really exciting time. We see this in all of our technologies and how they're being used. Take Service Einstein bots, for example, 700% increase in use versus last year. And a lot of the questions that are coming in now through the bots are questions about whether stores and restaurants will be opening back to full hours.
Interesting. Okay, so it's about wanting to get out, wanting to start to splash the cash you haven't been able to for a while, or indeed enjoy just the environment of people getting out and about. How changed, though, markedly changed, will restaurants be, will some of your clients be in terms of the way that they still use digital front and center, basically, as they reopen?
It's so interesting. We live in this all digital world now, and even for these in-person experiences that so many of us have craved for the last year, a lot of those experiences are going to start digital first, right? You think about going first and searching on Google or on your phone to see if a restaurant is open, or to book a flight or to book whatever travel that you want. And a lot of that is happening just completely online. And then even if the ultimate experience is in person.
Yeah, I certainly never want to go back to, digital payments is front and center for me. I was just at a market outdoors, and the ability to be able to just wander around without cash in your hands, to be able to do direct payments so easily, it's a whole new marked shift, and I'm sure it's sped up the pace of development and disruption over the United States with payments in particular. Where do you think customer services has changed in particular, Clara?
Oh, every aspect of customer service has changed. We saw this in the original COVID shutdown. Overnight, call center agents had to go home and start working from home. Before, I think there was this industry wisdom that it couldn't be done, but the last year has proven that completely wrong. And so now people are working as call center agents from home. Some people are working from stores when foot traffic is light as call center agents. And there's a lot of desire. The majority of customer service leaders we talk to, they don't want to go back to everybody in the call center every day, right? They're looking at these sustained remote strategies or hybrid strategies. And so it's really this idea of service from anywhere.
And what about the technology supporting that? I mean, artificial intelligence, of course, finally really coming to bear within your industry. How do you think it will be maintained? How will it be improved? What will we see that changes?
So much has happened in the last 12 months. I mean, you take something like Service Cloud Voice that launched last November and is our fastest growing product right now. And it just takes these real-time call transcriptions from the customer. And as the customer is talking, it's helping the service agent look things up in real time. And so it's this real-time AI assist, the way that many of us would use an Alexa or Siri at home. We're now giving that and putting that in the hands of service agents, whether they work at large companies or at small companies.
Anything that didn't quite work, or indeed that you put to practice and perhaps isn't going to be wanted to be used in the same way?
There have been a lot of lessons, a lot of learnings over the last 12 months. I mean, again, going back to the call center example, when agents got stuck in the old world, they would just turn to their neighbor or flag down a supervisor, and have them come talk to them. They can't do that anymore in this remote environment. And so we've really had to learn in real time and get creative. Again, using Service Cloud Voice, we also have something coming out next month for workforce engagement to say, how do we actually enable this on-the-job training and real-time coaching when we are in this remote and hybrid environment? And then also, how do we think more broadly about service? It's not just about the contact center, it's also about field service, right? Thinking about all of the elevator repairmen and women who are going out and janitorial and food service to help our office parks and help our sports stadiums come back and reopen for business.
Wow, that's an exciting picture you paint, and ones with plenty of lessons learned for us all. Salesforce Service Cloud CEO Clara Shai, thank you so much for joining us today. Meanwhile, still ahead, top executives and policymakers are discussing core issues of climate change at this week's Bloomberg Green Summit. Among them, we're going to hear from Zoox CEO Aisha Evans next about her outlook for the autonomous EV industry and its role in fighting the climate crisis. And as we go to break, investors liked Spotify shares after the company said it would increase some of its prices. Spotify says its US family plan will climb to $15.99, just $1 increase starting April 30th. Several service tiers in the UK will also see a hike. This is Bloomberg. So let's turn our attention to the world of autonomous vehicles again and the Bloomberg Green Summit that's underway. Bloomberg's Ed Ludlow spoke with earlier the CEO, Aisha Evans, of Amazon's self-driving startup Zoox to get her view on the wave of consolidation that has hit the industry in recent months.
I would say it's fair to say there's been a fair amount of consolidation. Look, I mean, this is a hard, complex problem. It's probably a generational, one of the hardest one from a generational standpoint. It's one that is worthy, so it's normal that many would pursue it. It's capital intensive. Also from a talent standpoint and from just being able to kind of find all of the talent, keep it and align your forces. And so when you're also raising capital, you probably have to make concessions that, in terms of what the investor or the strategic investor wants. So I think it's normal we're seeing this. How we're looking at this is Zoox worries about itself and focuses on execution and building a company the right way, meaning being really understanding that eventually this is a big business and you don't wait until you've solved the technology to build the company. You do that along the way. So that's what we're focused on. Now, at the end of the day, because it's a multi-trillion-dollar opportunity, we think that there will be several players. I don't want to be too facetious, but let's say it won't be many, but it will be a few. That's just the way capital markets work, the invisible hand of Adam Smith. And so we will have fellow travelers along the way who will also be competitors, and that's okay.
As I said, Aisha, I've had the benefit of going behind the scenes with you and seeing the the Zoox vehicle. But there's a great question from the audience, which is, what is Zoox doing to accommodate passengers with disabilities, such as blindness, deafness, or other mobility issues?
Great question. Thank you for asking that. We're in the middle of, first of all, talking to those communities, understanding. I think many times us engineers kind of solve a solution for somebody without asking them what it is that would work for them. So we're in the middle of figuring that out. And it's a broad community with differing needs. It's important to serve. And so we have a lot of concepts and conversations about how we're going to introduce that. I mean, right now it's important. This is our first prototype product. We're going to take it to market because solving the technology is really, really important. And as we're getting this information and looking at all of the different modifications in the future, we're taking the input into account and coming with solutions that will work for everyone.
There's a lot of excitement, optimism, particularly from Wall Street and the investor community, about President Biden, his administration, the infrastructure bill, and what that could mean for electric vehicles in particular. A lot of that seems focused on consumer or passenger cars. But do you see any specific momentum or boost coming from the Biden administration, specifically with regards to autonomous technology?
So first of all, we are encouraged to see the administration focus on sustainability. We think that's really important for decades to come and generations to come. So we embrace that and we welcome that. There's actually a lot going on in terms of autonomy. We are in constant contact with federal, state, and local authorities, both from a regulatory standpoint, from how do we basically merge into the existing footprint and environment. And I'm really, really encouraged because everybody sees what's going on in cities. They are congested. It's not like there's a lot of real estate footprint that you can just go, okay, I'm going to get rid of this and put more roads or what have you. And we also see the impact, frankly, on the real estate footprint in terms of parking. So so far, we've been very encouraged. Great conversations. I personally talk to a lot of people. So that's my co-founder, Jesse Levinson. And then our chief safety innovation officer, Mark Roskine, and his team are in constant communication, and we're influencing things, and they're also telling us what is important to them, and we're incorporating that into the product.
What a great conversation. Zoox CEO there, Asha Evans, speaking with our very own Ed Ludlow. Now, of course, we're going to have to talk about the downloads of HBO Max mobile app today, falling nearly 4% in the week ending April 25th, despite the much-anticipated debut of the action movie Mortal Kombat. Now, that's all according to Bloomberg's analysis of Apptopia data. For more, I want to bring in Bloomberg's entertainment reporter, Lucas Shaw, who might be a little bit tired, having stayed up to watch, of course, what we call the Academy Awards. I'd just basically call them the Oscars. But talk to us about the desire to be watching films at the moment in the cinema, in the theatres.
Well, the demand to go to the theater seems to be there for the first time in a very long time. You know, you mentioned Mortal Kombat. That movie grossed $22.5 million in North America this past weekend. That's the second biggest opening of the pandemic following Godzilla vs. Kong. Both of those are Warner Brothers movies. Warner Brothers, of course, part of the same company as HBO Max, and sort of late last year announced that it would be releasing all of its movies this year in theaters and on HBO Max at the same time. Theaters were very upset about it, but for the time being, that's what's keeping them open, is people are showing up for some of these new movies.
And it was interesting that we heard, of course, from the winners of the Academy Awards, Nomadland did incredibly well, and notably Nomadland, backed by Disney, available on streaming, but the woman who of course won the lead actor category for females, who starred in Nomadland, said, get out there, start sitting next to people in the dark in theatres once again. So she wants that to be seen on a big screen.
Yeah, you know, I think I saw that 7 or 8 of the 10 nominees for Best Picture were all available for streaming as of the Oscars, which is very unusual. But Frances McDormand, who you brought up there, was really the only person you heard last night stand up and call out to people to go back to the theater. I think there is still some concern that even when movies open in theaters, there's going to be a contingent of the population that just chooses to watch it online instead because there's so much release there. It's a little early for us,
think, to draw grand conclusions about what movie theaters are going to look like. We're still only at about less than a third of the country has been vaccinated, and so there are going to be a bunch of people who, understandably, are still a little nervous about it.
I can understand why Frances McDormand and Chloe Zhao, like Nomadland, is wide open spaces. It's beautiful, luxurious shots. I can understand why you need to go and see that in theatre. Same as like Godzilla versus Kong. Like, you just want a big space, whereas maybe a comedy based in South Korea, about a Korean family in the US, maybe doesn't need the big impact film environment that you're usually used to. What else is doing well? What else? How are CEOs, how are business leaders within the environment speaking to you about it?
I think the anticipation is that the movies that are spectacles will continue to do well in theaters. That's the Godzilla versus Kong, which did quite well. That's we have Fast and Furious 9 coming out later this year. I think that's expected to be a big hit. Anything in the Marvel universe or Star Wars, all the Disney movies, some of the big animated movies. These are projects where there's still a clear reason to go to the theater. A lot of the smaller kind of adult movies, comedies, and the like, I think it'll be harder to convince people to go to the theater. There's still maybe. I mean, this was the direction the movie industry was headed in before the pandemic, and as with so many cases, the pandemic has accelerated certain shifts.
Lucas Shaw, great story. Thank you for talking us through it. Meanwhile, that does it for this edition of Bloomberg Technology. Tomorrow we'll get earnings from, of course, companies Google, Microsoft, Pinterest, AMD. Later this week, you've got to have Apple, Facebook, Amazon. There is so much to be excited about. Of course, Tesla beating on revenue. Last look at the shares after hours, and CEO Elon Musk talking about the shortage in chips.